We can grab our seats again. Great session. How to go Mo Heath on his first Marine Money. We really appreciate it. At the other end of the spectrum, Greg Lewis was one of my first Marine Money meetings back when I started in 2006, and I haven't seen him in a while, and he's looking great. So Greg, thanks for being with us and leading the panel. Oil services, super interesting market, especially over the last few years. Everything that's happened there, and we're going to dive into it with Greg and Quintin and Robert. Thank you.
Yeah, hey everybody, thank you, good morning, and thanks for Marine Money for hosting this panel on offshore. This is always an interesting panel here at Marine Money because if you think about it, everybody in this room pretty much eats, breathes, lives and sleeps conventional shipping, tankers, LNG, dry bulk, where this is a little bit of a step out. A lot of the banks love these companies because they provide financing, but a lot of the investors and a lot of the people in here just are a little less familiar with that. And so just sticking with that before we, Robert, you're at Paratus, that's a newer company. It's a mix of jackups, a mix of vessels in Brazil. Maybe could you spend 2 minutes just introducing what it is you do and how your company's positioned?
Sure, can do that. So as you said, we're a fairly young company. We're an industrial holding company, or a public holding company. We came out of Seadrill back in 2022 following their restructuring. So we've spent the time since then establishing ourselves as a separate organization. We've refinanced, we've IPO'd the business in Oslo. Today we have a portfolio of 3 companies. We own 6 subsea vessels in Brazil, pipelaying vessels, an extremely attractive market. It's a joint venture that we own together with Sapura Energy out of Malaysia. We also have 5 high-specification jackups in Mexico, and we're the single largest shareholder in Archer, which is an international oil service company listed in Oslo. So since spinning out of Seadrill, we've reduced the leverage from 3.8 times down to around 2 turns at Q1. We've added $1.3 billion of backlog, which ultimately has allowed us to distribute steady returns to shareholders. Since our IPO, we've returned more than 30% of our market cap to shareholders. And today we sit with a free cash flow backlog combined with cash and AR balance, which more than exceeds our market cap. So I think we tick the box of the topic of deep value in oil services.
Great. And then just, Quintin, just kind of to set the tone or the stage for your company, Tidewater. I think a lot of people that look at the OSV space really just think it's focused on the offshore drilling and drilling activity. But, clearly there's more to that. So, as you think about the moving pieces and what drives your demand, whether it's a little bit of renewables or offshore drilling, could you talk about kind of what are the key drivers to your business?
Absolutely. Thanks for the invite to be here and to talk about the business. What drives the majority of our business is production-oriented activity. So in today's market, it's about 55% of the activity for our vessels is driven by offshore platforms, any type of floating production unit that's out there today. The balance is made up with drilling, offshore wind, offshore construction support, offshore pipeline support. So we certainly love the drilling market because it's what pushes us to the highest day rates and highest utilization. But even today, when drilling is a little bit sideways year over year, we'll probably have our best year in the past 12. So it's the production-oriented activity that really provides the basis for our activity levels.
Okay, great. And just we're going to kind of just dive in. This is an investor panel. I think we have 17 minutes left, so not a long panel in that. So, one of the key questions is, we look at your stocks. I was looking at charts. I mean, they're basically down over 50% off their highs from not too long ago. As you think about investing opportunities, clearly in shipping, it seems like the only thing that's there is maybe the product tankers, and they're not even down as much as your stock. So as you think about it, and we'll start with Quintin and then kick it over to you, Robert, where do you think we are in the cycle as it pertains to your business? And, I guess for you, maybe you can talk about the PSV market. Robert, maybe you can talk about the jackup market and maybe that subsea construction market. However you want to explain to us where you think we are in the cycle, and is this something where, given the stocks are well off their peaks, should investors be taking a look?
Yeah, absolutely is the answer to that question. But
Always is.
okay, but I'll talk about it from the supply side as well as the demand side. So on the supply side, I still think we're pre-game, quite frankly. It's, we're really early innings on the supply side, which is great because it is the aspect of our cyclical activity that has the most impact. And so because of everything that this industry went through from 2015 to 2019 and through the pandemic, there hasn't been any real investment in this sector. And even today, the order book is less than the replacement attrition on the fleet. So from the supply side, we're in a really good position. And that's really the most important thing to me. On the demand side, along the same lines, we are certainly seeing an increase in activity around the world in areas that have even since the pandemic, not been really active. So we're starting to see areas in Southeast Asia pick up. Obviously, there was a real pickup in West Africa after the pandemic. That's leveled off today, but I expect it's going to pick up again next year. There's certain areas that have been afflicted by regulatory issues and perhaps some public sentiment issues. The UK sector has been really off. But supply has been so tight that it hasn't mattered. We've been able to relocate the vessels into West Africa, into Australia as well. The Eastern Mediterranean just recently has come offline just because of the conflict that is going on in Israel, and as a result, the boats are pulling to the west. But I fully expect that those boats will go back to work here in the next month. At least I hope so. The U.S. has been surprisingly slow, U.S. Gulf of Mexico. It's usually one of the most reactive markets, but it's really been slow. There's been an excess of vessels on the market as well, but the Southern Caribbean, Guyana, Trinidad, and Suriname most recently have really begun to pick up. Brazil has been drilling through the cycle and drilling through the pandemic, and so their activity levels are strong and remain strong. So for us in particular, the demand side still feels like it's probably in the fifth inning or so. I think there's some general concern around the world that people are overproducing, and I see that because we saw it at the end of 23 when Saudi Arabia began to pull back a little bit, OPEC broadly. But I would say that even now, Saudi Arabia is starting to layer on some activity levels. That level of activity is increasing. So I still think we have another leg up before we get into any difficulties from an oversupply standpoint. So yeah, we're real happy with where we're at today.
Great.
Yeah, I think if you look at the jacket market, if you asked this questions 12, 18 months ago, everyone would have been saying that we're set for a new cycle. And then I think recently we've been through a perfect storm with Saudi Aramco releasing about 15% of the world's jackup supply into the market. Same, you've had turmoil in Mexico, and adding to that is obviously the geopolitical uncertainty and oil prices that are, I mean, last 2 weeks we've had oil prices $15 from high to low, right? So there's a lot of uncertainty. In addition, we've obviously been through a severe, prolonged downturn as an industry as a whole, which has burned a lot of investors. And I think you need to see more stability for a period of time. But I do want to say that there are differences between the companies, right? There's always been a story about next year and dividends coming. I think that's where, at least on our part, we've been trying to distribute from day one.
And that's all stocks, by the way.
Of course. I do think that it is genuinely a good time to start looking at this sector. We're positive about the long-term demands for the shallow water drilling activity. But right now, there's obviously still some overhang from Saudi Arabia releasing the rigs.
Yeah. Now that's a good point, and it's interesting. As you kind of tie in and compare and contrast this to conventional shipping. What's interesting is in shipping, everyone always views their ships as assets. In the offshore space, sometimes those assets become boat anchors because they're sitting there burning cash. And so we've seen that in jackups, and we've seen that in offshore supply boats, which is kind of, it sounds like what you're saying is you think we're in a mid-cycle pause in both these sectors, and it's kind of stay tuned. But you did mention oil prices. Clearly, no one in this room knows where oil prices are going to be tomorrow, let alone next week. But maybe if you could frame the context as you think about oil prices, is there these ranges where maybe we see activity kind of be steady versus a level where activity slows versus an activity price level maybe where activity increases? Kind of curious if you've thoughts, just thinking about how that pertains to the boat market as well as the jackups. I believe your subsea boats are all on long-term contracts, so they're probably utilization pretty much guaranteed. But if you want to start.
Yeah, no, in Brazil, we're obviously tied up until 27, 28 for our vessels, so less sort of impacted by near-term volatility. But I think there's less a question about the price, but more about stability, because what really hurts decision-making processes at our clients, that's the uncertainty, the inability to plan for a long-term, with a long-term forecast. So I think generally speaking, our clients, being national oil companies, they're less impacted by the capital markets when it comes to decision-making, but obviously oil prices at 65, I think they'll find a way to live with that. But when oil is going from 65 to 85, and that's when the decision-making comes to a halt, which overall impacts the industry because you're seeing a lack of contracts coming to award.
Yes, I agree with everything you're both saying, and I would say it's the long-term view more than the spot price, right? And from our perspective, even though oil has been relatively soft and we see OPEC releasing barrels into the market, the price has held up reasonably well. Obviously, the recent activity has probably put a premium into the price, but even before that, the price was holding up. What I can tell you from our perspective on the ground is that nobody is pushing projects to the right. So everything that we've been talking about with E&P companies, majors and super majors throughout the world continues to develop. And in fact, there's probably been some adds to that in northern West Africa over the last 6 months. So I think that the underinvestment that we saw in the offshore energy structure from 15 to 19 and through the pandemic is really weighing on people's minds, and there's going to be a continued investment in the offshore cycle, even at oil prices that we see today. So.
Yeah, and just in thinking about that, I mean, I know a year ago everybody was super focused on renewables. I guess starting late last year, you saw Shell and more recently BP talking about refocusing on exploration, refocusing on oil and gas. I think Petrobras the other week said if you're not doing exploration, you're not a real energy company. As you hear and think that, is that more rhetoric, or are we actually starting to see these kind of thoughts from kind of the big energy companies out there starting to percolate and provide some sentiment uplift in your kind of business lines?
Yeah, no, I agree with that. I mean, I really think the pendulum has swung more towards energy security and a long-term view on the long-term better economics for offshore fields versus terrestrial fields. So, there was a period of time, even 5 years ago, when everybody was, very focused on onshore U.S. I don't think that returns were ever as high as what you would get offshore, but the cycle was so small that people were willing to bet. And what I see today is because of the sentiment around the world focused on energy security, and because people believe that the energy transition will take longer than perhaps the world prefers, that they're willing to make those long-term investments in the offshore industry, offshore hydrocarbon industry, and everybody from the majors to super majors is talking in that same way.
Yeah, I think that's a perfect answer. Just add that depletion is real, so oil companies will have to continue to replenish their production, and I think particularly for nations like Brazil, for Mexico, for the national oil companies, that's their bread and butter, and they will continue to look for new ways to produce oil.
Okay, great. And then once again, you're both public companies. I mean, value always sounds good, but it seems like growth is what matters. As you think about growth, maybe kind of curious on your thoughts, Robert, you maybe kick us off around, M&A opportunities. Clearly, you're in a couple business lines. Clearly, I imagine you're not here to kind of run this business as is, as you kind of hunt growth opportunities. So kind of just curious as you think about the opportunities in the M&A space.
Yeah, as I said to begin with, we're a public investment company, right? So we probably have a somewhat different view than some of these operational companies. We inherited the asset base that we have today. In Brazil, we're extremely comfortable with what we have. I think when we look at that business, we would love to add more assets. Doesn't necessarily need to be pipe layers, but we're actively pursuing opportunities to add more vessels to what we think is a great platform with a great relationship to probably the most forward-leaning oil company in the world, being Petrobras. In Mexico, we are subscale. We have 5 rigs in one somewhat isolated market. We own 100% of that business. We don't need to own 100% of a single company. So I think we're that company. We're actively looking at ways to transform it. We want to diversify away from one client. We have 5 jackups, and we've said all along that there should be consolidation in the jackup market as well. So people know where to find us on that front.
Does that mean are you a buyer, seller, both?
Depends what makes the most value to our shareholders. I mean, we're in a position where we're here to maximize that particular investment for our shareholders. If we believe that selling an asset is the best way to do that, then maybe we'll look at selling it. But at the same time, overall, we want to grow as a company. We IPO'd to have access to the capital market, so clearly we have ambitions to go beyond where we are today. But it doesn't mean that we're just going to focus on what we have today. Maybe it's better to focus on subsea in Brazil for the time being. Maybe there's better opportunities there. But at the same time, in the jackup market, there's obviously depressed valuations. There are assets available. So we're certainly looking at that as well. But we're also not just sort of confining ourselves to the 2 subsets that we have there.
Well, we're more a traditional company in that way. Tidewater today is a combination of legacy Tidewater, but GulfMark and Swire and Solstad. And we will continue to look for opportunities to grow the business. One of the things that we think about when we think about the business is how we can run the business more efficiently. You know, one thing that we took away from the downturn is that we have to be the low-cost operator, and so we have to be as efficient as possible. We have to leverage technology to the largest extent possible. So we're very focused on the onshore infrastructure and building a long-term, consistent framework for deploying vessels around the world. From our standpoint, we're still very active on the due diligence front. We've been not shy about mentioning that publicly. Been really focused on areas in the Americas, so from Canada to the Gulf of Mexico to the Caribbean down to Brazil. And we'll continue to look for opportunities in those markets. Buying at the right price is important because value, to me, starts with the right price through the cycle. And so we'll look for the right opportunities to continue to grow inorganically. I still don't see the world in a position where it justifies new building, and my hope is that it'll stay that way for the next several years. There probably is a point in that 2030 timeframe when it makes sense, but it's certainly not today. So we'll continue to look for inorganic opportunities to grow the business. My hope is that we'll see it in the Americas, but I'm not afraid of doing something in the Asian theater or even again in West Africa.
Right. And then just as we think about the stocks, right? Clearly pricing matters and momentum matters with these stocks. You know, Robert, as you look at, you know, the jackup market, realizing, hey, right now we're only in Mexico, but it's a global market, and if things are good in other parts of the world, that tends to flow through globally over time. As you think about that, you know, how are you thinking about pricing, you know, maybe this week or maybe over the next few quarters?
In terms of assets or day rates?
I meant more around the actual day rates that rigs can generate.
Well, I think...
And feel free to talk about the asset price as well.
Well, on day rates, it's a little bit difficult, right? Because we've seen a downward trajectory in recent months. Also, because it's a very fragmented market, the jackup market. You have players that are shipyards owning legacy assets that came out of sort of without buyers at the end of the last downturn. You have Middle Eastern players that have recently wanted to take more of the market share overall in the market. They come with a very different cost of capital than ourselves and other public companies. So right now we have seen aggressive bidders. We think day rates are generally too low. We have one idle asset in Mexico. We are bidding her worldwide, but we're not going to chase work just to keep her working at margins that we don't find attractive. I think that goes for a lot of similar type of companies like ourselves, the public, more traditional companies. So I do think we're in a situation right now where we're waiting to see more contracts come. We are very optimistic that the second half this year will give a lot of opportunities inside Mexico, outside of Mexico as well, to add assets, to add backlog to our assets. So I think hopefully we'll see day rates around the levels where we saw them a couple of months ago, similar to what we are operating at today. I think I'll leave it with that without giving away too much information.
No, that was great. Quintin?
So we're in the fortunate position where supply is still very tight. So from our perspective, day rates are still going up, which is quite nice. So there's certainly some concerns in the near-term outlook, but I don't think anybody has any concerns on the long-term outlook. And with the dearth of supply that's out there today, we're still able to push day rates. You know, for example, our day rates are as high as they've ever been. In fact, they're the highest they've been in the past 20 years. And they're still increasing. Now, I'm still not earning my cost of capital because the industry has got itself overbuilt and never really pushed day rates to where they need to be. But my hope is that we're going to get there as we go through the next several years. So with supply remaining in check and with demand being, as we indicated, in a momentary pause, I think we're going to see day rates continue to climb into the high 20s and 30s, which for me is a significant rate.
Absolutely, and should be supportive of both of your companies. We're up on time, so with that, thank you, gentlemen, very much, and enjoy everybody's lunch.
Thank you.